All right, welcome to This Explainer. Today we're taking on a genuinely massive analytical challenge, making sense of India's largest and honestly probably its most complex conglomerate, Reliance Industries Limited. We're going to decode their entire strategic evolution using the audited data fresh from their FY26 report. So if you're looking to really grasp how a legacy giant transforms its entire identity at scale, well, you are definitely in the right place. Let's just quickly run through our roadmap for breaking down this multi-headed entity. We'll start by meeting India's corporate Goliath. Then we'll unpack their 5 core businesses, dive into the big consumer pivot, grade their overall financial health, look at some red flags and risks, and finally, map out the future of Reliance.
Okay, part 1. Meet India's corporate Goliath. To really wrap your head around Reliance, you kind of have to stop thinking of it as just a regular company. It's more like a multi-headed beast. Let's just start right here, $124 billion. That translates to roughly 11.75 lakh crore rupees in consolidated revenue for FY26. It is a figure of just sheer, unfathomable scale. Now pair that with this next number, 524 million. That is the total number of telecom subscribers currently sitting on their Jio digital platform. We're talking about more than 500 million people relying on their network every single day. And to round out that massive footprint, consider 20,160. That's the total number of physical retail stores Reliance is operated across India right now. Their physical and digital reach combined is simply unmatched. Which brings us to this pretty incredible quote straight from management in their FY26 audited results. Record revenue, record EBITDA, and record profit all in the same year. Hitting records across all 3 of those metrics simultaneously, that proves this Goliath isn't just sitting back and maintaining its historical size. It is actively compounding and growing across the board. Moving right along to section 2, unpacking the 5 businesses. So the core challenge when you're analyzing Reliance is that you're essentially evaluating 5 entirely distinct companies that just happen to share a single balance sheet. You've got these 5 heads of the beast: digital services through Jio, Reliance Retail, the legacy oil to chemicals business, oil and gas exploration, and a massive new commitment to new energy. We are literally jumping from high-tech telecom to early-stage clean tech here. And what's really fascinating is how the very nature of these businesses contrasts with each other. On one side, you have the incredible profitability of their tech arm, Jio Platforms, which is operating at roughly 52% margins. Then on the other side, you have the massive, high-volume scale of their retail and chemical arms. Those are highly cyclical businesses battling it out on incredibly thin margins of around 8.3%. Now, to really understand that high-margin Jio side, we need to quickly de-jargonize an absolutely crucial metric, ARPU, or average revenue per user. Think of it simply as how much revenue a telecom provider successfully squeezes out of a single user's phone bill every single month. Since India's overall subscriber growth is naturally starting to plateau, aggressively raising that ARPU is basically the main engine for Jio's future earnings.
All right, section 3, the big consumer pivot. This right here is the central narrative arc of our explainer today. We are watching a legacy oil company completely shift its identity. The consumer segment, which combines Jio, retail, and media, now commands 55% of the company's EBITDA mix. Meanwhile, oil to chemicals and the other legacy segments are down to 45%. So recurring consumer revenue officially dominates the profit mix now. It's a massive pivot.
Let's jump to section 4, grading the financial health. It's time for a bit of a financial dissection. We really need to address why seemingly poor return metrics like an 8.77% return on equity requires some very important context. Just look at the absolute strength of their balance sheet. Despite sinking historic amounts of capital into 5G networks and new energy, their net debt is incredibly well managed at 1.24 lakh crore rupees, and that is entirely offset by a massive 2.49 lakh crore in cash and equivalents. And this brilliantly illustrates why analysts literally have to use a sum of the parts valuation to understand Reliance's true worth. The market applies a premium tech multiple of 18 to 22 times to Jio Platforms, while basically treating the legacy oil business like a cyclical commodity at just 5 to 7 times. You simply cannot value this incredibly complex company with a single brushstroke.
Moving to section 5, red flags and risks.
Now, we absolutely must impartially report the headwinds identified in the FY26 data. Because look, even a corporate Goliath has serious vulnerabilities. First off, there's a multi-year global chemical glut, driven heavily by China, that is severely squeezing their legacy cash cow O2C margins. In fact, we saw Q4 margin deterioration all the way down to 15%. Second, intense competition is keeping Reliance Retail's margins razor thin at that 8.3% mark. And finally, there is substantial pre-revenue capital expenditure just flowing out the door to build up their new energy segment.
Which leads us to our final section, Section 6, the future of Reliance.
We really need to focus on their most ambitious piece of the puzzle yet, a 75,000 crore rupee commitment to building a fully indigenous green energy ecosystem. Looking at their roadmap, right now in the 2024 to 2025 timeframe, this is essentially an expensive pre-revenue capex sink. But in 2026, the rollout of 10 gigawatts of solar and 30 gigawatt hours of battery facilities begins. And by 2029, they are officially contracted to deliver green ammonia to Samsung. This timeline shows exactly how they plan to turn an incredibly expensive bet into a massive future profit engine. Meanwhile, the real wildcard here is management's clear directive. They are advancing steadily towards the listing of Geo platforms. Make no mistake, a future Geo IPO could act as the ultimate valuation catalyst, forcing the broader market to finally price this tech giant completely independently of the legacy oil business.
Which brings us to the end of our explainer. I want to leave you with this final, genuinely provocative thought about Reliance's next great pivot. With everything we've unpacked today, the massive shift from oil to consumers, the unfathomable scale, the disciplined balance sheet, will Reliance's 75,000 crore green energy bet become their next monumental Geo-level triumph? Or could it end up being an incredibly expensive misstep? Thanks so much for joining me on this deep dive.